Hello students, now we are going to see January 3rd week banking awareness. January 3rd week means from Jan 16 to Jan 22 banking awareness news we are going to see it. But before getting into the video, two important announcement. After watching this video, first announcement is that after watching this video, there is a quiz link in the description box. It is a timer based quiz. Totally will be having 45 questions based on the news article what we are going to see now, right? 30 minutes. It is a timer based quiz. Attend that. Definitely that will help you to boost your score in the bank exam. Another announcement is that if you want to download this week's banking awareness PDF, the news article which we are going to see today, if you want to download it, that PDF link is also given in the description box. You can download it, right? So let's start. So same as every week in January 3rd week banking awareness also, which were the topics which you are going to see. That is banking newses, non-banking financial company newses also we are going to see. This week insurance newses also we will be seeing under this topic. Then government finance. So these were the 4 topics which you are going to cover under this banking awareness heading for the January 3rd week 2023. So let us begin. January 16, Monday. From Monday we can begin. First news. SMBC Bank Octree submits expression of interest for IDBI Bank strategic stake sale. We all know that, right? So in IDBI Bank, government and LIC is going to sell their 60.72% share. So for that purpose, expression of interest was conducted. That is, those who are all interested to buy the 60.72% share, they can give their names. So that last date is for giving their interest, giving their name, the last date is January 7. So in that expression of interest list, SMBC Bank and Octree. SMBC Bank is a Japanese bank. It is a Sumitomo Mitsui Banking Corporation Group, Japanese bank, and Octree Capital. They were also ready to purchase this 60.72% share in IDBI Bank. That's what they have given in this news article. As usual, every week we have seen this information. In IDBI Bank, government and LIC is planning to sell their 60.72% share. Totally, at present, how many shares they were holding? 94.71% share. So in that 60.72% share, they are planning to sell it. So remaining 5.28% share will be there, right? So that share is held by the public. What government have insisted is that those who is winning the bidding, that is those who is purchasing this 60.72% share, that company must also purchase this 5.28% share from the public. That also government have insisted. This news I have told in the previous week banking awareness also I have told it. But anyway, this week news article also they have given this information. So once again I am repeating that, right? So totally for the current financial year, IDBI Bank, its revenue is 18 for the current financial year. No, for the previous financial year 2021-22, IDBI Bank's revenue is 18,295 crore rupees. Profit is 2,439 crore rupees. It's profitable company only. So in that company only, government and LIC is planning to sell their share. Then second news. Paytm Payments Bank gets final RBI note to operate as Bharat Bill Payment Operating Unit. Yes. Now RBI has given their final approval to the Paytm Payment Bank to operate as Bharat Bill Payment Operating Unit under Bharat Bill Payment System. Yes. Under Bharat Bill Payment System, they can now operate as Bharat Bill Payment Operating Unit. That is Paytm Payment Bank. In that payment bank, we can avail services like to paying electricity bill, phone bill, DTH bill, water bill, gas insurance, loan repayments, FASTag recharge, education fees, credit card bill, municipal tax. We can pay these bills in this Paytm Payment Bank. But before also we are paying this, right? In Paytm Payment Bank, these services are previously is also allowed. But RBI haven't given final approval. Before that, RBI have given only in principle authorization. That is temporary approval only RBI had given to this Paytm Payment Bank. Now they had given the final approval. What RBI have told now is that you can now operate as the Bharat Bill Payment Operating Unit. You can operate it. So Paytm Payment Bank Limited has got the final approval from RBI to operate as the Bharat Bill Payment Operating Unit under the Payment and Settlement Systems Act 2007. Right? Then third news. Securitization source 42% to rupees 1.15 lakh crore till December quarter this fiscal, says CRISIL rating agency. What they have told is that the current financial year 2022-23, in the current financial year up to third quarter, that is up to December 2022, securitization volume have increased at around 42% to around rupees 1.15 lakh crore rupees. Securitization volume has increased, as well as securitization numbers, originators have also increased to 120. Sir, what is maybe securitization? First, you must tell that, right? Let us see. Securitization is a process by which a company clubs its different financial assets. That is, if a company wants to have more funds, right? Example, think as a bank. If a bank needs more fund, what they can do is that they can club all their assets. That is, they can club all their loan securities and debt securities. They can club it. They can issue it as a bond. That is like a bond, they can issue it. That is called securitization. That is, if a company has already issued a large number of loans, that is, if a bank has received a large number of loans, still there is a demand. Still there is more demand. More and more customers are willing to get loan from the bank. Then what the bank will do is that to meet the demand, bank will club. That way, that is, bank will club all its different financial assets. That is, what is the asset for the bank? It is the loan, right? That is the asset for the bank. Liability is the deposit. So all these financial assets will be clubbed, will be mixed and given as a securities to the investors. So in these securities, if anyone want to invest, they can invest it. They will be paying the interest. It is like a bond. If we are investing in the bond, we will be having some interest, right? If you are in bank, if you are having FD, we will be earning interest rates. Same as that, if the bank or a company needs more amount to fund to their customers, they can raise that fund through the securitization. That is called securitization. This volume has now increased up to 42% till the third quarter of the financial year 2022-23, current financial year. That's what they have told in this news article, right? One more is that maximum CRISIL rating agency have given this data. Led by small finance banks, securitization activity became broad-based. Actually, more and more people, more and more companies, more and more banks are involved in this securitization business, and they are generating more funds. But we have to check, right, whether people are ready to invest in that securities. But more and more people are ready to invest in that. See, in non-mortgage space, that is in commercial vehicle and microfinance sector securities, more and more people invested. That securities also they have invested, personal loans and business loans, that security, because these loans are all assets for the bank. So with that asset, clubbing that asset, adding that asset, they will be issuing that as a security, and they will be collecting fund from the investor. And after that, 1 or 2 years back, they will be repaying the fund that they have collected from the investor with interest. But more and more investors are ready to invest in that securities. Personal and business loans, commercial vehicle, microfinance securities, more and more people are ready to invest in that. Then that is, it increased. In the financial year 2021-22, it is 3%. Now, this financial year, it is 7%. It got increased to around 7%. But property-backed loans, that is home loans. Home loans, securities, actually it got declined. It got declined from 43% in financial year 2021-22 to 38%. That got declined. But more and more people are ready to invest in this personal and business loan securities. But some people hesitate to invest in property securities also. Some people hesitate to invest, right? Right. That's what given in this news article. Then fourth news. RBI proposes to bring in expected credit loss based provisioning for banks. Yes. What RBI told is that we are ready to bring, RBI haven't brought that, but RBI is ready to bring expected credit loss approach instead of incurred credit loss approach. Yes. Previously, if a bank is giving the loan amount and if the borrower doesn't pay interest or EMI, that is, he is defaulting in his loan, that becomes NPA, right? Actually, after 3 months, for the 3 months, if the borrower doesn't pay any interest or the principal amount, that loan will automatically come to the NPA category, right? So that have more buckets, the NPA category, 1 year, 2 year, then after 4 years, automatically they will be writing off that loan from their balance sheet also. But this NPA, in order to tackle this NPA, what bank will do is that they will maintain loan provisions. That is, they will maintain some buffer amount. They will maintain it. So if the loan, if the loan given by the banks, if it gets defaulted, for that purpose, to fund that purpose, they will be having a loan provisioning, separate fund they will be having it. But what banks do is that once the borrower, after the borrower defaulting the loan, they will be going for the provisioning this fund. They will be planning that, okay, we should allocate more amount in this provisioning. That they will, that the plans are, that the banks are doing now. What RBI is saying is that instead of following this incurred loss approach, once the borrower had defaulted, after that we are going for this loan provision adjusting. Before that itself, if we are following this approach, expected loss approach, then that will help banks in giving the credit, in maintaining their adequacy or maintaining their capital. That will definitely benefit the banks. That's what insisted by the RBI. Actually, this expected credit loss approach, previously also bank have insisted. This expected credit loss approach, bank has insisted this must be followed by all scheduled commercial banks, but excluding regional rural banks. Regional rural banks, they don't have to follow it. But scheduled commercial banks, they must follow this approach, expected credit loss approach. What does that mean? Bank have to maintain higher capital. More capital they have to maintain it. More amount they have to keep in their loan provisioning fund. They have to keep it. So that's what insisted. But regional rural banks, they don't want to follow this expected credit loss approach. That's what told by the RBI. But before that, this expected credit loss approach is not a new one. Before that itself, RBI has given India's version of International Financial Reporting Standard. We have our own standard called IND-AS. In that standard itself, RBI have told that we must follow this expected credit loss approach instead of incurred credit loss approach. But NBFC companies are following that. NBFC companies are following that. That is IFRS 9. India's version of International Financial Reporting Standard. In IFRS 9, RBI had already insisted that non-banking financial companies, and they have told that more and more banks also could follow this approach, but still banks haven't followed that approach. Now RBI insisting is that better banks also follow it, excluding regional rural banks. Other than regional rural banks, all commercial banks, scheduled commercial banks, must follow this expected credit loss approach. What does that mean? That means bank have to maintain higher capital adequacy ratio. They have to maintain more fund in their loan provisioning buffer amount. Right? They have to maintain it. That's what told by the RBI. Then fifth news. Warehousing Development Regulatory Authority signs pact with the State Bank of India. Yes. Warehousing Development Regulatory Authority. What is meant by warehouses? It is like godowns. It is to store the farmers' produce. Actually, you see, farmer, suppose a vegetable farmer, after harvesting that vegetable, if he is storing that vegetable in his house for 1 or 2 days, after 2 days, that will become wasted, right? So, to protect the farmers, actually warehousing was set up by government. So, to maintain that, to regulate that, our government have Warehousing Development Regulatory Authority. Now, what they have decided is that Warehousing Development Authority, they have decided to sign an agreement with the State Bank of India to help the farmers in getting low interest rate loans. How, sir? How they are planning to help it? Actually, State Bank has decided to introduce a new loan product called Produce Marketing Loan. Let us see. Actually, in godown or else in the warehouses, farmer is bringing his vegetable, 100 kg of vegetables. He is bringing to this godown and he is storing. This godown, this warehouse have good refrigeration facility. It have good cold storage facility so that this vegetables won't be wasted. It will be perishable. It won't be perishable, right? It won't get wasted. So, to protect or to preserve that vegetables, farmers, they are bringing their produce to this warehouse and they are keeping that keeping their vegetables in this warehouse, and they are getting the bill from the warehouse authority. They are getting the bill, that is the receipt. They have stored around 100 kg of vegetables in this warehouse, and that 100 kg of vegetables worth is around 10,000 rupees. Let us assume 10,000 rupees. So that receipt will be given by this warehouse authority. They will be giving this receipt. With this receipt, farmers can go to the State Bank of India. They can get low interest rate loans. that loan product name is called produce marketing loan. That this receipt will act as a collateral. With this receipt, farmers can take loans, that is low interest loan. That will definitely help farmers, because previously without having the goodowns, what farmers will do is that once the vegetables or the fruits got wasted, if they are if they have invested around 10,000, if they are got the receipt around rupees 10,000 rupees, right? So 10,000 rupees worth of vegetables they have stored in the godown. Right? Now, if they are selling that vegetable, assume to rupees 5,000 rupees. Suppose if they haven't stored this 100 kg of vegetables in godown, instead after 1 or 2 days that vegetables got wasted, it got perishable, now they are selling their vegetables, but they are getting amount at around 5,000 rupees only. They are getting their amount lower than their investment, because to produce this 10,000 worth rupees vegetables, they have invested around 10,000 rupees. But while selling it, they are getting only rupees 5,000 rupees, less than the invested amount they are getting from the selling of this produce. So that is called distress sale. If they sold that produce on the same day on which they have harvested, they will be getting the good amount. But after 1 or 2 days, automatically that vegetables rate will get reduced because the quality gets degraded. So automatically they will be selling that produce lower than the amount they have invested. So that is called distress sale. So from the distress sale, this loan, produce marketing loan, will help the farmers, because now they are storing their produce in the godowns, they are getting the receipt, using that receipt as a collateral, they are going to the State Bank of India, they can avail loans at a low interest rate. Definitely that will help the particularly small and marginal farmers, they are going to get benefit from this. So that's what agreement is signed by State Bank of India, signed by Warehousing Development Regulatory Authority with the State Bank of India. That's what given in this news article. Then 60 news. RBI tweaks norms related to share acquisition in banks. Yes. Now RBI come to with their new norms, new rules. What is that? In order to acquire share in the banks, what RBI told is that you must identify the major shareholders of the banking companies. What RBI have told is that if a person is planning to acquire share in the banks, first RBI must check that that person is fit and proper. But prior to that, first what RBI told is that in the bank, the major shareholders, first RBI must check it. The major shareholders of the bank, first RBI must check that whether they are fit and proper. That's what they have given in their new norms. First, the major shareholders of the bank must be checked, whether they are fit and proper, they must be checked. Then, if anyone want to purchase a share in the bank, they must definitely submit an application to the RBI. After that only, after RBI's approval only, they can purchase the share from the bank, but there is also a limit. See, for the non-promoters and promoters, let us see, there is a bank named ABC. You must know first who is promoter, who is non-promoter, right? The ABC, there is a bank named ABC. This bank was founded by A, B and C. They were called promoters. Initially, to start this bank, this A, B and C, they have invested and started this ABC bank. They were called promoters. After 4 to 5 years, now this ABC bank is listed in the stock exchange, National Stock Exchange and Bombay Stock Exchange. It is listed. After that, a person named D, he is investing in this ABC bank. He will be called as the non-promoter. Non-promoter. Right? Initially, they were the owners. They were the founding members. They were called the promoters. After that, if this company's share is listed in the stock exchange and a person is buying that share, he will be calling non-promoters. Right? This is the difference between promoter and non-promoter. Now, let us see. For the non-promoter, if they want to buy a share in the banks, they could buy up to the limit of only 10%. That's what RBI have told in the new norms. Up to 10% only you can buy it for non-promoters, including individuals, non-finance companies, non-financial institution, financial institution connected with large industrial houses. You can invest up to 10% only in the banks. That's what told by the RBI. Second condition is that suppose if government or government companies, public sector undertakings or financial institutions, if you want to invest in the banks, you can invest up to the limit of 15% you can invest. For the non-promoters, non-finance companies, individuals, you can invest up to 10%. For government and public sector, public companies, the government companies and financial institutions, you can invest up to 15%. For promoters, if A, B and C, right? If they want to purchase more share, if A want to purchase more share from B or from C or from D, if he want to purchase, he can purchase it. But there is a limit. Up to 26% only he can purchase the share. But after 15 years, after the bank run for 15 years, after that only the promoter can purchase a share, but up to a limit of 26%. This is what the new norms told by the RBI. Right? That's what given in the new article. Then 7th news. Traders body seek credit card scheme for businessman in upcoming budget. Yes, right. This year, February 1, 2023, our finance minister is going to announce the next financial year 2023-24 budget. So, in that budget, Traders Association, Vyapari Bhavishya Nidhi scheme, Traders Association, what they were expecting is that, what they are demanding is that, like a Kisan credit card, a credit card which is exclusively given for the farmers, like Kisan credit card, government will be giving traders credit card. That's what they are expecting. They are expecting. Other things, what their demands is that, every trader registered under GST, trader registered under trading company registered under GST, they want accident claim of rupees 10 lakh. Accident insurance claim of rupees 10 lakh, and in that accident insurance claim, COVID-19 must also be included as an accident. So, COVID-19 type pandemic is also an accident, that must be also included. Then relief up to 4 lakh and income tax relief also they are expecting, they are demanding for 4 lakh in income tax and rupees 5 lakh for senior citizens, income tax relief they are expecting it. Then 3-tier pension scheme also they are expecting it. Already in the 2019, exclusively for the traders, pension is given. For the traders above the age of 30 years, month on month, every month 3,000 rupees pension will be given if up to 18 to 40 years, if he is contributing from his salary, that is if his earning is less than 1.5 crore rupees per year, he can avail this pension scheme up to 3,000 rupees. After the age of 60, he can avail 3,000 rupees per month pension. Already they are getting the pension, but still they are asking 3-tier pension scheme. Some more relaxation they are asking it. So that's what it is told in this news article. Then 8th news. TrueCap Finance and Shivalik Small Finance Bank partner up for retail gold loan assets. Yes. TrueCap Finance Limited is partnered with Shivalik Small Finance Bank to source and manage retail gold loans. That is, for managing and sourcing gold loans for Shivalik Small Finance Bank, TrueCap Finance Company is going to help them. They are going to play the business correspondent role. That is, Shivalik Small Finance Bank is outsourcing their loan customers, outsourcing their retail gold loans to TrueCap Finance Limited. So that's what it is given in this article. One more important fact is that, because we have seen it is given Shivalik Small Finance Bank, it is given right. So Shivalik Small Finance Bank is the first small finance bank in India to have transformed from the urban cooperative bank, because up to April 2021, Shivalik Small Finance Bank is a Shivalik Urban Cooperative Bank. After that only, it had got a license from the RBI to act as the small finance bank. So, it is the first urban cooperative bank in India to transform to the small finance bank. So, Shivalik Small Finance Bank is the first small finance bank in India to have transformed from urban cooperative bank in the year 2021 in April. So, they have got around 24 years of experience as an urban cooperative bank before April 2021. After April 2021 only, they have become small finance bank. Then 9th news. States' finances are improving. Gross fiscal deficit set to fall in financial year 2022-23, says RBI. What RBI is telling is that, RBI has published in their report, annual state finances report, what RBI told is that states are reducing their fiscal deficit. States are performing well. Now pandemic has ended. In India, pandemic has got over, economy has recovered, so state's expenses, it got reduced, state revenue got increased, so state fiscal deficit, it is getting reduced. What is mean fiscal deficit? What is deficit? If a person or if a government is spending more than their revenue, it is called deficit. So in the government, it will be calling it as fiscal deficit. They will be spending more than their revenue. More than their revenue, they are spending more, expenditure is high, then that will be called as fiscal deficit. But this fiscal deficit is reducing in all the states. Fiscal deficit in percentage of the GDP of that state, it is reducing. So it is reduced to around 4.7%, it is reduced to around 3.4% from 4.1%, because in the financial year 2020-21 fiscal deficit for the states is 4.1%. Now it gets reduced to 3.4% of the GDP. It got reduced. It must reduce. It must reduce. Right? Because that's what given in the fiscal responsibility legislation target. In the FRBM Act also, they have told that state and the country, India also should reduce their fiscal deficit to 3%. That's what the target fixed by the fiscal responsibility FRBM Act. But we haven't achieved the target. It is above 3.4%. But what government have told is that we must bring the fiscal deficit within 4%. But we have achieved the government target. But the FRBM, fiscal responsibility legislation target, we haven't achieved because pandemic. Because from the year 2020, we have got the pandemic, so that revenue for the states, for the country also, India also, revenue got reduced, but the expenditure is more. Health expenditure for the vaccines, medical expenditure, it got exceeded. So that was the reason fiscal deficit got increased. But now the economy has recovered, pandemic has got over. Now the fiscal deficit for the states, it is getting reduced. That's what told by the RBI in their report. Right. Then one more information RBI told in their report is that debt consolidation remains a priority. That is, in the percentage of the state's GDP, state government's GDP, their debt is also decreased. In the financial year 2020-21, 31.1% is their debt in percentage of the GDP. Now that had reduced to 29.5%. But that is also the limit higher than the limit prescribed by the Fiscal Responsibility Budget Management Review. Because FRBM Act we have in 2003. So to review this FRBM Act 2016, government have formed a committee under the head of N.K. Singh. That time RBI governor is Urjit Patel. So under N.K. Singh, a committee was formed to review this Fiscal Responsibility Budget Management Act. So after that, they have submitted a report. In that report, what they have told is that state government's debt in percentage of their GDP must be within 20%. But this limit we got exceeded. But anyway, we are close to that. That's what it is told in this news article. So that's all. January 16, Monday news we have finished. Now we are going to see January 17, Tuesday news. Okay, right. 10th news. Why Indian banks want US card networks like Visa and MasterCard to have a share of UPI Pay? Actually, this article is given in Economic Times. Actually, in this article, what we have to know is that now RBI is planning to give Visa and MasterCard access to the country's popular online payment protocol. We know that, right? In our country, most probably all credit and debit cards will be Visa and MasterCard. So after that only, our government have launched our own card called RuPay card. RuPay card, we have launched it. But most of the credit and debit cards are Visa and MasterCard. But now people are not using the cards, credit and debit cards, they are not using it. Moreover, people are moving to the UPI transaction. That is, they are paying in Google Pay or Phone Pay or Paytm, they are paying it. Right? In Paytm, they have advanced also. In actually, China also they have it. Same as India, we have Paytm, Google Pay, Phone Pay. In China also, they are having their own app called Alipay and WeChat Pay for the UPI transaction. So same as that, India also have it. We have Google Pay, Paytm, Phone Pay, we have it. But Paytm, they have introduced a sound box. Actually, if you pay the amount in UPI, the amount, if it is received to that merchant, to that shopkeeper, if it is received to a person, that amount, that is this much amount is received, it will be announced in a sound box. There will be a speaker, small speaker, that will be announced, so that that person don't have to check his account, whether this person's amount is credited or not. He don't have to check it. So that alert will be given in that sound box. That also Paytm have given. So due to that advancement, more and more people and more merchants and shopkeepers and traders are moving to this UPI transactions. But still you see in India, Visa and MasterCard hold around 90% of the credit card market. More and more people are using RuPay cards, more and more people are using UPI transaction, but still in RuPay cards, 600 million cards were circulated throughout the country, but most of the RuPay cards are debit cards. But 90% of the Visa and MasterCards are credit cards. So credit card market is dominated by, that is 90% it is Visa and MasterCard. So still more and more people are using Visa and MasterCard for the credit card purposes. What government have planned is that previously government have moved the RuPay credit cards to, government have linked the RuPay credit cards to UPI also. Actually, if you are doing any UPI transaction or if you are paying from the Google Pay, that will be connected to an account, but that will be a debit account, right? That will be connected to a debit card. But if you are having RuPay cards, that RuPay credit cards also, that will be linked to the UPI. Right, that also government have introduced. Now, what government have thought is that, okay, right, RuPay credit cards also we have linked to UPI, right? So, same as that, why can't we allow Visa and MasterCard? Why can't we allow Visa and MasterCard to also have their own UPI services? So, that's what now RBI is planning, because UPI only more and more people are transacting. That is, the share is more in UPI transaction. That share we can just get some share out of that and move to Visa and MasterCard. So that's why most Indian banks, want US card networks like Visa and MasterCard to have a share of UPI pie. But still, previously you see Visa and MasterCard have gone into many allegations in India, right? Because they are all American card manufacturers, Visa card, MasterCard, they are got into many regulatory trouble. And because what the government have insisted is that, what RBI have told is that, what RBI told to Visa and MasterCard is that the data which you are storing in your database, that database must be in India. You should not store our Indian data to your database in America. So better shift that database to India. That's what RBI told to Visa and MasterCard companies, but they haven't obeyed it. But that's what a trouble situation between our RBI and the Visa and MasterCard companies. But now what RBI thought is that now the settlements, that is between the relation between the Visa and MasterCard companies and between the Indian government and RBI, it got improved. So now what they have planned is that, okay, let us grant Visa and MasterCard access to the popular online payments protocol like UPI transaction. Let us allow Visa and MasterCard also. That's what RBI had now planned. Right. One more important information is that we know that UPI transactions, that services, it is provided by, it is taken over by the National Payment Corporation of India. Here NPCI is the operator of the UPI transactions. Same as that, for the RuPay cards also, it is a sponsor. National Payment Corporation of India is also the sponsor of the RuPay cards. That information also you know it. So that's all we have to know from this article. This graph they have given in RBI website also they have given. What they have given is that, see, 4 billion transactions, 4 billion payments, 4 billion, 1 billion is 100 crore. 4 billion payments are done through UPI. But see, this debit cards, credit cards, it is very, very low. Around 0.1 billion people are using credit card, debit cards for the transaction purposes. More and more people, 4 billion people are making their payments in UPI. So that's what this graph indicates. Right. Then 11th news. RBI's new proposal on loan loss provisions to raise bank capital needs. As usual, we have seen previously, right? What RBI have told? You must change from the incurred loss approach to expected credit loss approach, because current method where loan loss provisions are made after a default. After the customer have defaulted, we are adjusting this loan loss provisions. So now what RBI have told is that you can just move on to expected credit loss. So after the default, rather than after a customer making the default, after that we are going to adjust this NPA provisions. Before giving the loan to the borrower, we can adjust it. We can improve our NPA provision fund. We can improve our capital adequacy. After that, we can give the loan to the borrower. So that's what insisted by the RBI. We must follow expected credit loss method instead of incurred credit loss method, because the current method is where loan loss provisions are made after a default. After a default only banks will be going to that NPA provision, they will be allocated, they will be adjusting the funds in that. But RBI is telling that prior to that, before giving the loan, adjust it. So that's what the expected credit loss method is that. Then 12th news. Finance Ministry to meet heads of public sector banks on Thursday. Actually, in January 19, Finance Ministry is going to meet the MDs and CEOs of the public sector banks, government banks, to review the progress of the various schemes, various government schemes, to review its progress, because government would have announced more and more schemes, but that schemes will be linked to the bank account. Most probably it will be linked to the government banks, right? So to review that progress, to review the progress of the government schemes, Finance Ministry is conducting the review meeting on Thursday, on January 19, with the bank MDs, public sector banks MDs and CEOs. So in that they are discussing about the schemes like Jan Dhan scheme, Mudra scheme, Kisan Credit Card scheme, PM Swaminidhi scheme. They are going to discuss it. So one or two schemes we can see it. PM Swaminidhi scheme. Actually, this scheme, it was introduced by our Prime Minister Modi in 2020. In the pandemic time, Prime Minister Modi have introduced this scheme to give credit, low-cost loan to street vendors. For the street vendors to avail the credit up to rupees 10,000. Up to rupees 10,000, our government have launched a scheme called PM Swaminidhi scheme. So that progress is also they are going to discuss in this meeting. Then in this meeting, they are going to discuss about Pradhan Mantri Jeevan Jyoti Bima Yojana and Pradhan Mantri Suraksha Bima Yojana progress also they are going to discuss. Pradhan Mantri Jeevan Jyoti Bima Yojana is life insurance scheme. Pradhan Mantri Suraksha Bima Yojana is accidental insurance scheme. So if you are having the bank account and if you are paying 12 rupees per annum, we can get accidental insurance worth rupees 2 lakh rupees. We can get it. So same as that, if you are paying 330 rupees per year, we can get life insurance worth rupees 2 lakh rupees. If you are having the bank account, you can avail it. But this payment, this premium amount, it got revised. 330 for life insurance scheme. Pradhan Mantri Jeevan Jyoti Bima Yojana, the premium amount 330 rupees is increased to 436 rupees. For the Suraksha Bima Yojana, 12 rupees is increased to 20 rupees. This scheme review progress is also reviewed in this meeting. Then they are going to review the Mudra Yojana, Stand Up India scheme. Mudra Yojana, you know it, right? 10 lakh rupees loan to non-corporate and non-farm MSME sector, up to rupees 10 lakh rupees loan is given to them. So that is called Mudra scheme. Stand Up India scheme is to the underprivileged sections of the society, disadvantaged sections of the society, most probably to the lower community people, to fund them or to give loans to them. Stand Up India scheme is also launched by the government. So this scheme's progress is also going to be discussed by the government. Then Kisan Credit Card progress is also going to be discussed in this meeting. So overall, Finance Ministry is going to discuss with the public sector banks, MDs and CEOs about the progress of the government schemes. Then 13th news. States fiscal on should use good times to build a capex with the RBI paper. Yes, RBI in its research paper, what they have told is that state governments are reducing their fiscal deficit. That is well and good. But still it is more than the encasing committee report. That is, it is more than the fiscal responsibility and budget management review committee report. As usual, I have told, right, in the year 2016 to review the FRBM Act of 2003, encasing committee was formed. In that committee, former RBI Governor Urjit Patel is also there. Former Finance Secretary Arvind Subramaniam is also there in that committee. So they have submitted the report in 2017. He is encasing. Nand Kishore Singh, he is encasing. So major recommendations given by the committee is that they proposed that FRBM Act must be replaced with a new act, Debt Management and Fiscal Responsibility Bill. That's what the first recommendation they have given. They have given 78 recommendations. Most important recommendation I have given in this video. Debt to GDP ratio. Out of the GDP, the debt should be less than 20%. Because in the FRBM Act, they have given 38.7%. That should be reduced to 20%. That's what the second recommendation. Third recommendation is fiscal deficit must be reduced to 2.5% by the year financial year 2020-23. Actually, we are in the year financial year 2023, but we haven't yet achieved the target. But anyway, we are reducing the fiscal deficit, but we haven't achieved this target given by NK Singh committee. That's what it is told in this news article. That's what told in the RBI research paper also. Fiscal deficit is reduced by the states, but still it is less than the still it is more than the NK Singh committee report. That's what they have given. But what RBI is telling is that, RBI is telling is that, so more and more states have asked to reduce their fiscal deficit. What states will do? They will reduce their expenditure. But what RBI is telling is that states should not reduce the capital expenditure. You can reduce your expenditure. Revenue expenditure, you reduce it, but capital expenditure, you should not reduce it. That is to fund for the infrastructure purposes. You should not reduce that. Rather than that, you can reduce other expenditures, because if the government is telling, or if the RBI is telling that states should reduce their fiscal deficit, what they will do? First, they will reduce their expenditure. They will reduce their expenditure. Right? For that expenditure, states will straight away go to the capital expenditure and reduce that. RBI is telling that you should not reduce that. So, what RBI is telling is that central bank suggested that states consider creating a capital expenditure buffer fund. For funding the capital expenditure purpose, a buffer fund should be created and not treat capital as residual and the first stop for cutbacks. So, they should not use capital expenditure as a residual one. If the RBI is telling us that you should cut your fiscal deficit, we should reduce your fiscal deficit, straight away you should not reduce your capital expenditure. Other than that, other expenditures are there, you try to reduce that. So, that's what is insisted by the RBI. That's what they are given in this research paper also. That's all they have given in this news article. Then 14th news. Old pension schemes could strain state finances, RBI warns. Yes, more and more state governments are moving towards the old pension scheme. Recently, Himachal Pradesh have moved to the old pension scheme. Previously, Rajasthan, Chhattisgarh, then Jharkhand, then Aam Aadmi ruled state. Punjab is also moved to the old pension scheme. So, most of the states, it is the opposition party states only, they are moving to the old pension scheme. What they are telling is that it is for the welfare of their employees. Only they are moving to the old pension scheme. Because in the old pension scheme, before 2004, if a government employee is retiring, on the time of retirement, if he is getting, example, 1 lakh rupees salary, 50% he will be getting as the pension. That is around 50,000 rupees he will be getting as a monthly pension. But for this pension amount, he won't be contributing from his salary. For PF, he will be contributing from his salary. But for the pension amount, he won't be contributing from the salary before 2004. After 2004 only, what government thought is that more and more fund is spending from the government's pocket. More and more expenditure, they are checking that where is government spending more. They have found that in the pension, they are spending more. So, what government thought is that, okay, right, now let us cancel the old pension scheme, then let us move on to new pension scheme or national pension scheme. In national pension scheme, employee must contribute for the pension. As well as the fund amount, they will be investing in the share market, right? So, they won't be getting any 50% loss driven salary. Loss driven salary is 50% they won't be getting at the pension in the new pension scheme after 2004. But for the vote bank purposes, more and more state governments, which is opposite to the BJP party, which is opposite to the current central government party, they are insisting old pension scheme in their states. For their state government employees, they are telling that we are bringing back the old pension scheme. But more and more people are working in the private sector. But state government employees, they will be favoring this, right? In the Himachal Pradesh, in Jharkhand, in that state government employees, they will be liking this initiative. They will be liking to return to the old pension scheme because they will be getting more amount as a pension. But what RBI is telling is that it is not good. RBI wants. It is a major risk. States returning to the old pension scheme is a major risk. You will get into the trouble of the fiscal deficit. That is, you will have more fiscal deficit. You will have more fiscal deficit. So, RBI is warning. You are moving to the old pension scheme. Now, we are going to have more fiscal deficit. Your expenditure is going to exceed. Better check it. So, that's what RBI has warned the states. Then, 15th news. Investment MOUs worth rupees 88,420 crore in Maharashtra, in Davos so far. Yes. World Economic Forum annual meeting is held in Switzerland in Davos. In that meeting, Maharashtra CM Eknath Shinde is also participating. Right, that meeting is going to be held from January 16 to January 20. In there, Maharashtra CM is also participating, and he is raising more investment proposals. So, overall, 88,420 crore rupees investment agreements were signed in the World Economic Forum annual meeting by the Maharashtra CM. That's what they have given in this news article. Then 16th news. EPFO may fix threshold for ETF returns. Yes. Employee Provident Fund Organization may fix threshold for exchange traded funds returns. Exchange traded funds. Actually, it is also like the shares, right? But in exchange traded funds, companies will be, exchange traded allows investors to buy many stocks. More stocks you can buy it. As an investor, you can say, you can buy more stocks or shares from bonds from the market, right? But in mutual funds, actually, ETF is more or less related to mutual funds. Exchange traded funds, it is called mutual funds. Mutual fund, it is not like that. Mutual fund, it allows investors to pool their money. More and more investors, they won't have any experience in the share market, right? So for that purpose, they will be going to the mutual fund company. They will be giving their amount. We are ready to invest in the mutual fund. So more and more fund will be collected from all the investors that will be invested in the share market by the mutual fund company. But exchange traded funds, investor will be directly going to the share market and invest in more and more stocks and bonds. They will be investing it. Exchange traded funds will be traded on stock exchanges. It will be traded on stock exchanges, but mutual funds, it will be bought directly from the company. We can buy directly from the bank or the company, finance company, we can buy it. Mutual funds, we can buy it. Then exchange traded funds are traded whenever the stock market is open. That is the exchange traded funds stock price or a bond price, it gets fluctuated daily. But mutual funds value will be priced only once per day. So that's what it's the difference between exchange traded funds and mutual funds. Now what EPFO, Employee Provident Fund Organization, told us that we are fixing a threshold to invest in the exchange traded funds because from the year 2015-16, EPFO is investing around 15% of their corpus amount, 15% of their fund, they are investing in the exchange traded funds and they are getting higher returns. Now what they are telling is that we are getting more returns, we are getting more profits. In that booking profit, we are allocating 10%. We are taking out 10% and we will be keeping it. So that's what they have told. They will consider mandating a 10% return threshold for booking profit. Suppose EPFO is investing 10 lakh rupees. 10 lakh rupees in the share market, right? After 1 year, they have got around, share value got increased. So totally, they have got around 11 lakh rupees. So this extra 1 lakh rupees, it is their profit, right? So they will be taking this 1 lakh rupees out of that fund, and again, in that stock, in that bond, they will be having around 10 lakh rupees only. In that share, they will be having around 10 lakh rupees. So that 10%, because 10% of 10 lakh is 1 lakh. 1 lakh they will be taking it. So that's what EPFO told. So let us fix a threshold, fix a limit. 10% booking profit we will be taking it out. So rather than selling the entire at a one sale, let us redeem exchange traded funds bit by bit. 10% we will be taking it as a profit. We will be from the profit we will be taking 10%. We will be taking it. So that's what they have told it. Important information is that from the year 2015-16, EPFO is investing in exchange traded funds up to 15%. That limit is very important because if they are having 100 rupees, 15 rupees they are investing in exchange traded funds and they are getting higher returns. Right? Okay, right. So January 17 Tuesday news we have finished. Now we are going to see January 18 Wednesday news. Okay, right. 17th news. Strategic re-entry, ING weighs buying IDBI Bank for India return. So we know that, right? IDBI Bank is going to, in IDBI Bank, government LIC is planning to sell their 60.72% share. So to buy the 60.72% share, Netherlands largest lender, largest bank, ING Group has also submitted their expression of interest. They have also given their names in the expression of interest that they are willing to buy the government LIC share in IDBI Bank. But you see, actually 4 years back, ING Group, they have shares in the Kotak Mahindra Bank. 4-year bank, they have sold all these shares in the Kotak Mahindra Bank. So for the past 4 years, they haven't invested in any company in India. But after 4 years, they are returning to India and they are ready to invest in this IDBI Bank. So that's what they have given in this article. 4 years after announcing sale of its last tranche of shares in Kotak Mahindra Bank, because 4 years before, actually in the year 2018 only in Kotak Mahindra Bank, they have sold all their shares. So after that, for the 4 years, they haven't invested in any company in India, but after 4 years, they are ready to invest in the IDBI Bank. So that's what more important in this news article. So ING Group is a largest lender in Netherlands. So previously, Netherlands is called as Dutch, right? Now it is called as Netherlands. Okay, then 18th news. Sri voting process on 3 resolution plans to begin on January 19. So we know that, right? Sri group of companies, Sri Infrastructure Finance Limited and Sri Equipment Finance Limited companies, resolution process is going on in National Company Law Tribunal. So 3 resolution plans were submitted by NIRCL. So 3 resolution plans submitted by the resolution applicants, NIRCL, Optum Investment and Infrastructure, and Vardhe Partners and Arena Investors. So they have finally submitted their bidding amount in the auctioning, right? So that voting, so to whom, among 3, to whom the bank, that the committee of creditors are going to give this loans, Sri Infrastructure group of companies, bad loans. Among the 3 resolution applicants, that voting process, to whom this committee of creditors is going to give the Sri Infrastructure Finance and Sri Equipment Finance companies loan. We have to wait and see. That voting process is going to be conducted on January 19. It is going to be conducted on January 19. 3 resolution plans were submitted. So voting will be conducted among the committee of creditors. That is those with the banks which have given loan to the Sri group of companies. So they have to recover the loan. For that purpose only, they have gone to National Company Law Tribunal. They have approached National Company Law Tribunal, and administrator was appointed by the NCLT. So finally, bidding was conducted, and 3 companies have given their bidding amount. So among 3, to whom they are willing to give the loans, we have to decide in this voting on January 19. January 19, Thursday. Only this day only they are going to conduct the Thursday only they are going to conduct the voting for the resolution process. But let us see the 3 resolution plans submitted by the companies are, that is the 3 resolution applicants are NIRCL, Optum Investment and Vardhe Partners and Arena Investors. NIRCL have quoted a total plan value of rupees 14,667 crore rupees. In that they have quoted net present value as 5,555 crore rupees. Optum Investment Company total plan value is 9,126 crore rupees. Vardhe Partners and Arena Investors, they have quoted on 12,890 crore rupees. Right. So if we see the total plan value, NIRCL has quoted the highest amount. In net present value also, NIRCL has quoted the higher amount. But you see, actually voting process will be based on the upfront cash and the net present value, not on the total plan value. They will be giving to those companies who is ready to pay upfront cash, who is ready to pay more in the upfront cash, as well as who is ready to who quotes more in the net present value. So for them only, most probably in the voting process, the banks will be, committee of creditors will be allocating the loan to that company, right? So in that, NIRCL have quoted higher total plan value, higher net present value also NIRCL have quoted, but the upfront cash quoted by the NIRCL is rupees 3,240 crore rupees. It is lower than the Vardhe Partners. They have quoted around rupees 3,250 crore rupees. But yeah, actually Optum has an advantage in upfront. Actually, NIRCL have quoted the upfront payment of rupees 3,180 crore rupees. Sorry, I have given the wrong data. NIRCL have quoted the upfront cash of 3,180 crore rupees. Optum company have quoted that they are willing to pay upfront cash of 3,240 crore rupees. Vardhe Partners, they are willing to pay upfront cash of 3,250 crore rupees. So if we see the upfront cash value, NIRCL is lagging behind. So let us see on January 19 to whom they are going to give this Sri Finance companies loans. Let us see the voting process which happens on January 19. We can see that. Then 19th news. Reliance Capital hearing scheduled on Monday. Administrator informs the tribunal. Yes, actually December 21, 2022, Reliance Capital Company's auction was conducted. E-auction was conducted. But in that auction, Torrent Group have quoted the higher amount, rupees 8,640 crore rupees. This data we have seen in the previous week, and previous week banking owners also we have seen it. Again and again we are seeing it. But this week's news article also they have given the same data. Once again we are seeing it. Once again I am repeating it. It is not new to you. If you have followed regularly the banking owners every week we have followed, this is not new to you. So for Torrent Group they have quoted on rupees 8,640 crore rupees on that auction day. But after the auction day, one day after, Hinduja Group have told that I am ready to give more amount than the Torrent Group, that is 8,950 crore rupees, including they are willing to pay upfront cash of around rupees 8,110 crore rupees. So more than Torrent Group, I am ready to pay it, give that loan amount to me. But Torrent Group, they have complained to the National Complaint Law Tribunal. What they have told is that on the bidding day, that is on the auctioning day, I have quoted the higher amount. Then Reliance Company's loans must be given to me. I must win the bidding. But what National Complaint Law Tribunal and the administrator have decided is that both companies, Torrent Group and Hinduja, both companies have quoted the value below the liquidation value, because they have expected at around 12,500 crore to 13,000 crore rupees. They have expected. They have expected that they will get this amount in the bidding. But both companies, Torrent and Hinduja Group, they have quoted below this rupees, and they have expected that committee of creditors, that is, the administrator expected that upfront cash they will get around 8,000 crore rupees. Upfront cash, both companies are ready to pay 8,000 crore rupees. But liquidation value, they have expected more. They have expected more. Administrator expected more. So for that purpose only, they are planning to conduct, that is, they are ready to conduct next auction, next challenge auction. That is to be conducted on January 19. But that challenge auction is postponed to January 23. That challenge auction is postponed to January 23. That's what given in this news article. So next week, January 4th week, Monday, they are going to conduct this auction. Then 20th news. Finance Ministry seeks expenditure proposals for final supplementary demand of grants. Yes, Finance Ministry on February 1, 2023, she is going to announce the budget for the upcoming financial year 2023-24. So before that, Finance Ministry is asking all the ministries and department, if you need any extra amount, for the expenditure purpose, kindly say to me, because in the budget session of the parliament, I am going to submit the budget, as well as I am going to submit the supplementary demand of grants. What is supplementary demand of grants? In budget, if I have quoted 1,000 crore rupees for agriculture sector, but actually this 1,000 crore rupees, what I have quoted in the budget, it got that is exceeded. It got exceeded in the month of December itself. Still 3 more months is there for the financial year 2022-23. Still I need 500 crore rupees extra. So that 500 crore rupees, they will be submitting that 500 crore rupees as the supplementary demand of grants. Right? That is supplementary demand of grants. Extra amount. To the amount what they have quoted in the budget, if they want any extra amount, they will be raising the fund through the supplementary demand of grants. So for that purpose only, Finance Ministry is asking all the department. I am going to announce the budget in the budget session of the parliament. If you need any extra amount, kindly tell us, because I am going to submit supplementary demand of grant also, because it is the final batch of the supplementary demand of grant, because the previous supplementary demand of grants is announced in the winter session of the parliament. Previous month only they have announced the supplementary demand of grants. So previous month, first batch of supplementary demand of grants is announced. So second batch, Finance Ministry is asking. So I am going to announce the second batch of the supplementary demand of grants. If you need any extra fund, kindly tell me. Right? Let us see the data for the previous month. The previous month, in the first batch of the supplementary demand of grants, extra amount they have raised is around 3.25 lakh crore rupees. Government have asked around additional spending of over 3.25 lakh crore rupees, which included rupees 1.09 lakh crore rupees for the fertilizer subsidy. So they have raised around 3.25 lakh crore rupees, more than the amount they have quoted in the budget. In the winter session of the parliament, December month, they have raised it. So again in the February month, in the February 2023, in the budget session of the parliament also, they are going to raise the second batch of the supplementary demand of grants, because it is the last batch. After that financial year 2023-24 will be started. Right? April 1, 2023, new financial year will be started. So that only Finance Ministry is asking all the department to give expenditure proposals for the final supplementary demand of grants, which is going to be submitted in the February month of this year. Actually, the budget session will be generally divided into 2 parts. Part 1 will be concluded from February 1 to 13 February. Part 2 of the budget session will be from March 13 to April 6. So this is what the actually in 2 parts budget session will be done in the parliament. So in the first part, Finance Minister will be announcing the budget. In the next part, most probably supplementary demand of grants will be raised by the government. Right? One more fact is that actually this fact it won't get changed. For the budget 2022-23, actually in the February 1, 2022, Finance Minister announced the budget for the financial year 2022-23. So in that, Finance Minister, what she announced is that total expenditure for the government, total expenditure for the government needed is rupees 39.45 lakh crore rupees. That's what they have announced. More than the amount compared to the previous financial year 2021-22. So in the financial year 2021-22, budget expenditure is 37.70 lakh crore rupees. But for the year financial year 2022-23, budget expenditure is quoted more than the financial year 2021-22, around 39.45 lakh crore rupees. So this data, it won't get changed. But more than this, our government have spent more. Our government has asked more amount in the supplementary demand of grants. In the winter session of the parliament, they have raised around 3.25 lakh crore rupees. So in the budget session also, they are planning to raise the more fund. So around 42 or 43 lakh crore rupees total expenditure will be spent by the government. That's what actually in March 31. Once the financial year gets over, only we will be getting the actual data, because this is the budget estimate. But we will be having the revised estimate. Revised estimate is actually what the government have announced is that for the financial year 2022-23, we need 39.45 lakh crore rupees for the expenditure purpose. But they need more amount. That actually in the revised estimate, actually in the budget, Finance Minister will announce the revised estimate. Actually, what was the amount got spent? Actually, it exceeded the budget expenditure. The expenditure proposal, what they have raised in the budget estimate, it exceeded it. So for that purpose only, they have got additional 3.25 lakh crore rupees in the winter session of the parliament as the supplementary demand of grants. This month also they are planning to get more in the supplementary demand of grants. That is this month, no. February month also they are planning to get more amount through the supplementary demand of grants. So that's what it is given in this article. But you have to remember this data, because this data won't get changed. But in the budget estimate 2022-23, what was the expenditure proposal given by the government? It is 39.45 lakh crore rupees. That you have to know it, right? 21st news. Finance Ministry deliberates steps taken to deal with cyber security issues. Yes, there was a conference, symposium launched by the Financial Services Secretary Vivek Joshi sir. In that symposium, government and more finance companies, officers, government departments, more officers, they have participated in that conference. So in that, what they have discussed is that how to mitigate the threats of cyber security, how to tackle the cyber security. That's what discussed in that symposium. As well as what they have told is that our government is planning to bring revised draft digital personal data protection bill. In that bill, we have included more provisions to tackle these cyber threats. So that also they have discussed in that symposium. So that's what they have given in this news article. Then 22nd news. Mathura gets investment proposals worth rupees 17,507 crore in one day. Hema Malini. Yes. Mathura MP Hema Malini ma'am, what she had told is that Mathura had received around 17,507 crore rupees investment proposals prior to the Global Investor Summit, which is to be held in Uttar Pradesh in the month of February. So next month in February, Global Investor Summit is to be held. So prior to that, before that, in the month of January, in every district, Uttar Pradesh state government have planned to conduct a investment proposal, that is Investors Summit. So in that Mathura also they have conducted a one-day summit. So in that one day in Mathura district, around 17,507 crore rupees investment proposals were received. This is what told by the Hema Malini ma'am. She is a famous actress, right? So that's what she is an MP of the Mathura constituency also. She had told this information. But important information is that next month, February month, in Uttar Pradesh, Global Investor Summit is to be held in Lucknow. Right, it was to be held. So prior to that, Uttar Pradesh government have decided, okay, right, let us start a district level investor summit in the month of January. So in Mathura, they have received around 17,507 crore investment proposals. So this will give more employment opportunities for those unemployed people in the Uttar Pradesh state. So around 40,000 jobs would be created, and more investment proposals were received in the tourism, health, MSME and education sectors. So that's what told by Hema Malini ma'am. So that's what they have given in this news article. So that's all. January 18, Wednesday, Bank and News we have completed. Now we are going to see January 19, Thursday news. Okay, right. 23rd news. Japanese banks gets go ahead to settle all trades via CCIL. Actually, 1 month back, banking awareness, we have seen that European Securities and Market Authority, same as SEBI in India. We have Securities and Exchange Board of India, SEBI, to regulate the stock market. We have it, right? Same as that. In Europe also, they are having European Securities and Market Authority and Bank of England. It is the central bank of the UK. In India, we have RBI, right? So, same as that, in UK also, they are having central bank. That bank name is Bank of England. Previous 1 or 2 months back, banking owners, we have seen that European Securities and Market Authority and Bank of England have de-recognized Clearing Corporation of India Limited. That is, they have de-recognized RBI and SEBI. They have de-recognized Clearing Corporation of India Limited. They have de-recognized it. But in this news article, it is against those European Securities and Market Authority. What is that? The news is that Japanese banks have got clearance from their regulator, Japanese regulator, to settle all the trade settlements via Clearing Corporation of India Limited. So it is a setback. Actually, it is against the decision taken by the European Securities and Market Authority and the Bank of England. It is against the Bank of England and the European regulator. Right? Japanese banks, that is European Securities and Market Authority and Bank of England, what they have told is that European banks are Britain banks. Foreign banks, if they are having their branches in India, foreign banks, that is European banks, if their branches are in India, the Indian bank branches, they decided that they will de-recognize our Clearing Corporation of India Limited. That is, the European banks in India, that is the European bank branches in India, they will not follow the regulations of the Clearing Corporation of India Limited. That's what they have told. Bank of England also, they have told the same as that. But now, Japanese banks, what they have told is that our regulator, Japanese regulator, same as that. In India, we are having RBI and SEBI, right? Same as that, Japan also, they are having their central bank and their regulator. What they have told is that, okay, right, Clearing Corporation of India Limited, Japanese bank branches in India, the trade settlements can be cleared by the Clearing Corporation of India Limited. They have given approval. So it is a setback. It is a throwback to the European market regulator. So that's what it is given in this news article. What Japanese banks have told that usage of Clearing Corporation of India Limited, the usage is that, advantage is that it will give greater operational flexibility and lower capital requirement for the Japanese bank branches in India. So for that purpose only, we are dealing with the Clearing Corporation of India Limited. So we are satisfied with them. So it is a setback. It is a throwback to the European market regulator. That's what they have given in this news article. Then 24th news. British banks in India may get breathing space with a new amendment. See, Japanese bank regulator, what they have told is that Japanese bank branches in India, they can follow the Clearing Corporation of India rules. They can obey. That Clearing Corporation of India can settle all the trade settlements. Now, prior to that, Bank of England, that is the England's central bank, they have also cleared. They have also recognized the Clearing Corporation of India Limited after Japanese banks. So, British banks in India may get breathing space with a new amendment. Yes, in Britain, they have passed a new amendment in the UK's financial market regulations, and they have told that we are ready to recognize the Clearing Corporation of India Limited. That's what they have told it. Then 25th news. Finance Ministry exhorts banks to achieve targets of social security schemes for financial year 2022-23. Actually, we have seen, right, January 19, there is going to be a review meeting between Finance Ministry and the public sector banks, MDs and CEOs. So, in that review meeting, actually January 19, it is held. The review meeting is held. In that review meeting, government asked about the progress of the social security schemes, and what government insisted is that Finance Ministry, what they insisted to the banks is that you should set up financial literacy camps to create awareness among the people about the digital products, about the digital financial transaction. You must create awareness among the people. For that purpose, you must organize financial literacy camps. For example, UPI Lite. There is a digital financial transaction including UPI Lite, but that was not known to most of the people. Create awareness about that product. What is UPI Lite? If you are having smartphone and if you are not having any internet, if you are not having any data, we can transact using that app to pay via UPI to the shops or to the any customers or to the any merchants. We can pay using this UPI Lite app. So for that purpose only, National Payment Corporation of India has launched this UPI Lite app. So for using this UPI Lite app, you need internet. First to credit the 2000 rupees in the UPI wallet. So if you are having the internet, first you must credit rupees 2000 in the UPI Lite wallet. After that, if you are not having internet also, you can go to a shop, you can purchase a product and you can pay without internet using this wallet, UPI Lite wallet. But the limit is there. In UPI Lite wallet, you can store up to rupees 2000 rupees. Up to 2000 rupees only you can store in the UPI Lite. That is without internet, you can transact up to rupees 2000. And per transaction, there is a limit per transaction also. So per transaction, you can spend around rupees 200. So to the maximum of 200 rupees, you can spend using UPI Lite app. Per transaction, rupees 200 is allowed. Maximum limit in the wallet is 2000 rupees. 2000 rupees you can store in that wallet. Using that 2000 rupees without any data, without any internet, using UPI Lite app, you can pay. You can pay to the shops where you are purchasing any product, but per transaction limit is 200. So up to 200 rupees only you can purchase a product per transaction. After that, if you want to purchase it, next to 200 rupees you can debit from the UPI Lite app, but it is without data. But for crediting this 2000 limit in the UPI Lite wallet, you need data. So first to credit this 2000 rupees in the wallet, you need internet. After that, if you are not having any internet also, if you are going to a shop, you are purchasing a product without internet, you can pay up to the maximum of rupees 200 per transaction. So actually the calculation is that 10 transactions you can use it to the maximum of 10 transactions per rupees. That is 200 rupees per transaction. Up to 10 transactions you can use UPI Lite app without having any internet also. You can pay using the UPI services. So that's what the UPI Lite is. But this product, it is not known to most of the people. So what Finance Ministry is telling is that better create financial literacy camps, organize financial literacy camps and create awareness among the people. That's what RBI have told. Then RBI had conducted a review meeting based on the other schemes implemented by the government. That is Jan Dhan Yojana, Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana, Mudra Yojana, Prime Minister Atma Nirbhar Nidhi scheme, Swaminidhi scheme. So in this scheme also, what was the progress? Finance Ministry had got a review. They have conducted a review meeting with the public sector banks, MDs and CEO. Then 26th news. Kedra Capital invests rupees 800 crore in NBFC Avanci Financial. Yes. Education focused non-banking financial company. It is Avanci Financial Services Limited. In this company, Kedra Capital. It is a Bangalore-based company. This company has invested around 800 crore rupees. That's what they have given in this article. One more fact is that in this Avanci Financial Services, in this NBFC company, the major shareholder is the Warburg Pincus company. They were the US company. They were the major shareholder. Then 27th news. In the budget 2023, Indian shadow lenders call for rescue route from cumbersome compliance maze. Yes. Our finance minister is going to announce the budget 2023. That is on February 1, 2023. She is going to announce, Finance Minister Nirmala Sitharaman ma'am is going to announce the budget for the financial year 2023-24, upcoming financial year. She is going to announce it. So, prior to that, NBFC companies is demanding, is asking the government that in the budget, you give some relaxations for us. That is, NBFC companies are regulated more by the Reserve Bank of India. That is, they have to follow more norms, more compliance obligations are there for the NBFC companies, because Reserve Bank of India, Reserve Bank of India is controlling more. Actually, in the NBFC company, Reserve Bank's control is more. That's what told by the NBFC company. NBFC company told that their visibility and control in their organization, they have told that they don't have their visibility and control in their own company, because RBI is regulating more. Their compliance obligations are more in the shadow lenders, that is the NBFC company. NBFC company, the other name for the NBFC company is shadow bank or shadow lenders. So that's what they are demanding to the government. In the budget, give some relaxation for us, announce some relaxation for the NBFC company, because RBI is having more compliance obligation, more regulations to us. So better relax some regulations. That's what the NBFC company is asking to the government in the upcoming budget. Then 28th news. Resolution of twin street companies delayed as voting on winning bidder is on hold. Right. Yes. January 19. Resolution of twin street companies voting is to be held. But it got delayed. It got postponed due to the arrival of the NABARD. Because in the last minute, NABARD had arrived and told that, okay, right, whoever is winning the voting, whoever is winning the bidding, whoever is chosen by the committee of creditors, that amount, from that amount, actually the committee of creditors will be choosing from the NIRCL. That is, these were the 3 resolution applicants chosen by the committee of creditors. NIRCL, Autumn Investment, Infrastructure and Arena Investment are their partners. So from these 3, committee of creditors will be, that is the Rajani Sharma, Sri's administrator, Sri resolution administrator is Rajani Sharma sir. He will be choosing one company. That is the Sri group of companies. Loans will be given to this, any one company among the 3. Last minute, NABARD had arrived and told that I am having more securities in this twin Sri companies. I am having more shareholding in this twin Sri companies, so that in the resolution process, after the resolution process, the amount which you are getting from these companies, whomever winning that bidding, whomever winning that voting, that company will be giving the amount to the group of committee of creditors. In that amount, major amount must be given to me. That is, the higher share of proceeds must be given to NABARD. That's what insisted by the NABARD. Because I have given more securities, because I am having more security in this Sri group of companies, so that higher share proceeds must be given to me. So that's why this twin Sri companies resolution that voting process got delayed. Actually, it is to be held on January 16. That gets delayed to January 19. But now it got further delayed. Because in the last minute, NABARD had arrived and told that among the distribution of proceeds, that is, after the resolution process, the amount which they are getting from the winning company, that from that amount, major amount must be given to me, because I am having the higher securities in the twin Sri group of companies. That's what told by the NABARD. So for that purpose, the voting got delayed. Right. That's what they have given in this news article. Then 29th news. Joshimath subsidence, IRDA asked insurers to expeditiously settle claims. You know that. Joshimath town in Uttarakhand. So in Joshimath town, more and more landslides and land got subsidence. So more and more properties are got subsided because landslides occurred in the Joshimath town in Uttarakhand. The reason is that Joshimath is located in a geographic location near to the Himalayas. That is in the convergent belt. If a place is located in the convergent belt, more and more earthquakes and landslides will happen. Same as that, Joshimath also, landslides will happen. But in the Joshimath town in Uttarakhand, more infrastructures, unplanned buildings were built. So due to that only, more and more buildings in the Joshimath town, it got cracked and more landslides happen in that Joshimath town. So for that purpose, IRDA, insurance regulator, what they have told is that those who have availed the property insurance, those who are paying the property insurance, for them, settle the claim in a speedy manner. So that's what told by the insurance regulator. So the insurance regulator asked the insurance companies to take steps for expeditiously settle claims for those who lost their property, but they are paying the property insurance, settle the claims in a fast manner to them. So that's what told by the insurance regulator, IRDA, that they have told it. Prior to that, IRDA announced one more thing. What they have told is that each and every insurance company, that is the general insurance company, they will be only settling the claims for the loss of property, because general insurance company will be handling this property insurance claims. So what IRDA told is that insurance companies must, that is the general insurance companies must appoint a nodal officer in each and every district. That is, in the affected districts in the Uttarakhand, each and every general insurance company must appoint a nodal officer. That nodal officer must process all the receipt, fees and settlement claims. He should only do that. He should only settle all the claims, all the insurance claims. He should only settle it. For that purpose, each and every insurance company must appoint a nodal officer. He should be the final point, final officer which the people should meet, and speedily people should get the claim. So for that purpose, IRDA has announced all the general insurance companies to settle all the property claims for those people who had availed the property insurance in the Joshimath town of Uttarakhand, right? So in addition to that, insurance regulator have told that nodal officers must be appointed by the insurance companies to settle the claims also. They have told that. So that's all they have given in this news article. That's all. So January 19, Thursday bank account news we have completed. Now we are going to see January 20, Friday news we are going to see. Okay, right. 30th news. Moody's affirms positive ratings on State Bank of India, upgrades 3 other public sector banks. Yes, Moody Credit Rating Agency has given positive ratings for State Bank of India and 3 other public sector banks like Bank of Baroda, Canara Bank and Punjab National Bank. For these 3 banks as well as for State Bank of India, Moody Credit Rating Agency has given the upper ratings, that is Baa3 rating they have given. Baa3 rating for State Bank of India as well as for Bank of Baroda, Canara Bank and Punjab National Bank also they have given rating up to Baa3. Okay, right, highest rating they have given because public sector banks are performing well. After the pandemic, during the pandemic also, public sector banks have done a tremendous job. So after the pandemic also, the economy has recovered. So in that also, public sector banks are doing good. So for that purpose only, Moody Credit Rating Agency have increased the ratings for State Bank of India and these 3 public sector banks, right? So that's what they have given in this news article. Then 31st news. Moody's upgrades credit ratings of 3 state-owned banks. Same news, right? Same news what we have seen previously. So for the 3 public sector banks, Bank of Baroda, Canara Bank and Punjab National Bank, Moody Credit Rating Agency have increased the rating up to Baa3. Right. Then 32nd news. Finance Ministry asked banks to increase credit penetration in 112 aspirational districts. Yes, actually January 19, Finance Ministry have met with the bank's head, that is the MD and CEOs of the banks. They have met with the Finance Ministry. So during that review meeting, so January 19 there was a review meeting between Finance Ministry and the bank head, MDs and CEOs. So in that review meeting, more schemes, the implementation of the government schemes like Mudra Yojana, then PM Swaminidhi scheme. So all these schemes reviews was done in that meeting. Same in that meeting, what they have discussed is that Finance Ministry, what they have told to the banks is that actually banks must increase the credit penetration to 112 aspirational districts. This 112 aspirational districts, this program, actually there is a separate program called Aspirational District Program which was launched by our Prime Minister Modi in 2018. So 2018 to transform the 112 most underdeveloped districts across the country. So there were around 112 most underdeveloped districts in our country. So to transform those districts, our Prime Minister Modi have launched a program called Aspirational Districts Program in 2018. So prior to that program, what our Finance Ministry have told to the bank head is that so each and every bank must increase the credit penetration in these 112 aspirational districts. As well as you have to organize financial literacy camps also you must organize with the local Panchayat Raj institutions. With their help, you must organize the financial literacy camps as well as you can give rewards and recognitions and prizes to those best performing districts. You can give rewards and recognitions. So to increase the credit penetration in these 112 aspirational districts, Finance Ministry have insisted all the bank head for that, right? So that's what they have given in this news. Then 33rd news. Bandhan Bank's Q3 net profit falls 66% to rupees 291 crore. This data will change. Actually, for the third quarter, Bandhan Bank's profit have reduced almost 66% to rupees 291 crore. So that's what they have given in this news. Then 34th news. Bombay High Court relief to Yes Bank 81 bondholders on petition against rupees 8,415 crore write-off. Yes, actually it is an interesting news article. Actually we know 1 or 2 months back or every week banking awareness we will be seeing this, or in general awareness also we will be seeing this news article. Yes Bank has a defaulted. Yes Bank has gone into a scam on 2020, right? Most of the management people in the Yes Bank have given or done many scams in that. So due to that purpose, Yes Bank got defaulted. So in the year 2020, RBI stepped in to recover the Yes Bank. So at the same time, RBI had changed the board members also. So in that management board, they have appointed Uday Kotak, then chairman of the Kotak Mahindra Bank, then Deepak Parekh sir, HCFC chairman, they have appointed. So in order to recover, in order to restructure the loan to be recovered from the Yes Bank, right? Same in that year, what Yes Bank have done is that they have written off rupees 8,415 crore 81 bonds. Now this case went to the Bombay High Court. Bombay High Court, what they have told now is that you should not write off this 8,415 crore 81 bonds. That's what Bombay High Court have told. But before that, what is 81 bonds? You must know that, right? 81 bonds is called additional tier 1 bonds. These bonds are called perpetual bonds. That is, these bonds doesn't have any maturity date, right? It is same as the FD, fixed deposit. We will put in the bank, right? Fixed FDs in the bank. Actually, if we are having any FDs in the bank, it will be having some maturity date. 1 year, 2 years, 3 years. Tenor will be there for the FD, right? Same as that, for this 81 bonds, there will be no maturity date. There will be no maturity date. Same as FD, bond also functions in the stock market, right? So FDs will have interest rate, bonds will have coupon rate. It will also have tenor, but unlike some other bonds, this 81 bonds will not have any maturity date. That is, this 81 bonds will be issued by the banks if they need fund in an emergency situation. So for that purpose, they will be issuing 81 bonds and they will be giving higher interest rate. Higher rate of interest when compared to other bonds. When compared to other bonds, 81 bonds will be having higher interest rate, but it won't be having any maturity date. That is, if the bank decides after 5 years or 6 years, okay, right, let us call it, then only this 81 bonds will be taken over from the investor and the money will be paid. Or else, this 81 bonds will not have any call option. That is, they won't have any maturity date. If the bank decides only, they will be calling it off. Then for the investors who are investing in the 81 bonds, if they want to sell it, they can sell in the secondary market of the stock exchange. They can sell in the secondary market in the stock exchange, they can sell it. But in the primary market, that is the 81 bonds which is issued by the bank, we can't sell directly to the bank. If the bank decides only, they will be buying from us. Paying the interest, they will be buying from us. But in most of the cases, banks won't pay the interest also in 81 bonds. Because 81 bonds will be issued by the banks in emergency situation, but it will have higher interest rate. It will have higher risk. If you want to invest, we can invest, right? So around 8,415 crore rupees worth of 81 bonds was issued by Yes Bank in 2020. But in 2020, what they have decided is that they have decided to write off those 8,415 crore 81 bonds. What does that mean? That is what they are telling is that we are writing off this 81 bonds. That means those who have invested in this 81 bonds, they won't be getting any returns. They won't be getting the money what they have invested. So that's what Yes Bank have told in 2020. But now Bombay High Court have stepped in. What they have told is that no, you should not do like that. This 81 bond holders, you must repay them. You must repay them. You should not write off from your balance sheet. That's what Bombay High Court have told to Yes Bank. Right. So for that purpose, Bombay High Court have given judgment like that. Then they have given 6 weeks time to Yes Bank. Okay, right. If you are having any queries, what is the progress, you can tell within 6 weeks. So you are having only 6 weeks time. So before that, you have to tell to the court what you have decided. You have to tell to the court. Right. So now Bombay High Court have cancelled this 8,415 crore write-off of 81 bonds. So that's what they have given in this news article. Then 35th news. Canara Bank to sell its stake in Russian joint venture to SBI for rupees 114 crore. Yes. Actually, in Russia, there is a joint venture bank named Commercial Indo Bank LLC. It is called CIBIL. In this bank, SBI is having 60% share. Canara Bank is having 40% share. The bank which is in Russia, SBI is having 60% share, Canara Bank is having 40% share. Now Canara Bank have decided to sell their 40% share to SBI at the cost of 114 crore rupees. So that's what they are given in this news article. Then 36th news. Insurance industry needs rupees 50,000 crore capital every year to double penetration. Debashish Panda sir. Yes. Insurance regulatory chairman Debashish Panda sir. He is Debashish Panda sir. What he had told is that, it is his opinion, what he had told is that every year insurance industry need 50,000 crore capital investment to double penetrate the insurance to the people. In order to penetrate, actually in order to circulate more insurance to the people, every year 50,000 crore capital investment is needed for the insurance industry. So more and more business people and more investors must invest in insurance industry. That's what he had told. For that purpose, what in addition to that, what he had told is that actually insurance industry have fixed a target, that Indian government has fixed a target, is that in the world, the largest, at present India is the 10th largest insurance market in the world. But what they have decided is that around 2032, we are planning to move to 6th largest insurance market. So we are planning to move to the 6th rank. At the same time, what insurance regulator fixed the target is that by 2047, each and every one in India will have the insurance. So to achieve this target, what he had told is that, Debashish Panda sir, what he had told is that for achieving these targets, we need 50,000 crore investment every year. That's what he had told. Then 37th news. Noida Investor Summit attracts rupees 11,500 crore of investment proposals. This news previously also we have seen it, right? So in Uttar Pradesh, next month, February, there is going to be a global investor summit which is to be held in Lucknow. Prior to that, in the month of January, they are conducting district level investor summit. So in Mathura also they have conducted district level investor summit and they have got many investment proposals. Same as that, in Noida also they have conducted district level investment summit and they have got investment proposals around 11,500 crore rupees. That's what they have told in this article. Right, that's all. January 20, Friday bank account news we have completed. Now we are going to see January 21, Saturday we are going to see it. Okay, right. 38th news. IDBI sale, Fairfax sought waiver on security check. So we all know that, right? So IDBI Bank, in IDBI Bank, LIC and government is planning to sell its 60.72% share. So to buy this 60.72% share, IDBI Bank have conducted the expression of interest and that last date is January 7. So within January 7, 2023, who and all want to buy this IDBI Bank's government and LIC share, you can give your names. Expression of interest. That deadline was January 7, 2023. But prior to that, one day before, that is on January 6, Fairfax company. This company also given their name in the expression of interest list. What they have told is that we want 14 days, that is fortnight waiver for security clearance. That is, we need 14 days time for the security clearance purposes. But we are giving our names. We are ready to participate in this IDBI Bank's government and LIC's sell of the share. Right? We are ready to buy their share. But we need 14 days time for the security clearance check what you have to do in our company Fairfax. But that 14 days time, now it got expired. Yes. January 6, they have asked for the 14 days time. January 20, it got expired. Now what Fairfax Group is telling is that actually we have given the name that we are ready to participate in the bidding. But after the final bidding gets over, who is going to win? That company's security check is needed, right? Now what is there an urgency to have a security clearance for the companies who are all participating in this expression of interest? That is, those companies whom are giving their names in the expression of interest, why they should give their security clearance check? Why should there be an urgency in doing this security clearance check? After the bidding process gets over, who have won the bidding, that company's security clearance can be done, right? Instead, why this company's, that is Fairfax Group's company's security clearance check must be done in this expression of interest list. That is, we have given our name in this list. Right. After the bidding, who is going to win, that company's security clearance check can be done. But we have given our name. That is, we have given our interest. That's all. So what is there an urgency to do a security clearance check? Because we are not ready to share our confidential information, because for the security clearance check, that is for those companies who is participating in this, that is who is giving their names in this expression of interest, that company's security clearance, that company's securities or confidential information must be shared to the government. But Fairfax is not ready to share. So for that purpose only they have asked for 14 days waiver, but that waiver got over. Now what they are telling is that why we have to give our confidential details, why we have to give now. After winning the bidding, we can give it. If that, after winning the bidding, suppose if we win the bidding, we can, our company security clearance can be done, check can be done, right? Now the security clearance check, that is irrelevant, that would not remain relevant. That is not relevant now. That is, those companies are willing, they are giving their names. After winning the bidding, security clearance can be done. What is there an urgency? That's what this Fairfax company is asking. But they have asked for 2 weeks time for the security clearance. That time is also got expired. That's what they have given in this news article. Okay, then 39th news. 81 bond case, Yes Bank to appeal Bombay High Court order even as Q3 profit falls. Yes, same as that we have seen, right? In the 81 bond case, Yes Bank, the 81 bond case related to the Yes Bank, Bombay High Court have quashed that. That is, they have cancelled those write-off of this 8,500 crore 81 bonds, and they have given, Bombay High Court have given 6 weeks time. 6 weeks time for their reply. What they have decided. So you can take 6 weeks time, then you can give your feedback. That you can give your decision after 6 weeks. Within that 6 weeks, what this Yes Bank have decided is that they are planning to, that is, they have decided to appeal in the Supreme Court against the Bombay High Court order. They are planning to appeal in the Supreme Court, because they have told that, Yes Bank have told that, High Court, you have given us 6 weeks time. Within that 6 weeks, we are planning to appeal in the Supreme Court. Right? That's what they have given in this news article. That's all. January 21 Saturday news we have completed. Now we are moving into the January 22 Sunday news. That is the last day of this week's news. We are going to see it. Okay, right. Let us see. 14th news. Budget 2023. Government may not give public sector banks a capital infusion. Public sector banks, what they are expecting is that in the current budget, that is for the financial year 2023-24 budget, government will not give any capital infusion. That is, the government will not give any fund for the government banks. That's what government banks is telling. This year also we won't get any capital infusion. We won't get any funds from the government, because current financial year also government haven't given any capital infusion for this public sector banks. So last in the year financial year 2021-22 only, last government have given 20,000 crore rupees for the recapitalization of the public sector banks. That is, in the year, finally in the year, last in the year 2021-22, for the financial year 2021-22 only, government have given rupees 20,000 crore rupees fund for the government banks. After that, the current financial year 2022-23, they haven't given any fund for the public sector banks. So in that, one more data is that from 2016 to financial year 2016-17 to financial year 2020-21, government have infused fund around 3,10,997 crore rupees fund they have infused in the public sector banks. They have infused around 3,10,000 crore rupees fund in the public sector banks for their capital purposes. For the 5 years from 2016 to 2021, they have infused the fund. So in that 34,997 crore rupees, it is given in the budget. In the budget itself, they have decided that, okay, right, this much the amount will be given to the public sector banks for the capital purposes. The rest 2,76,000 crore rupees fund, which is given by the government to the public sector banks, was issued through recapitalization bonds. So through the bonds only, they have, government have issued 2,76,000 crore rupees fund. That is up to financial year 2021-22 only. Finally, government have given the loan, given the fund to the public sector banks. So last they have given rupees 20,000 crore. But for the current financial year as well as for the next financial year also, government is not ready to infuse any capital. That is, the government is not ready to fund any capital for the public sector banks, because public sector bank is performing well. Public sector banks have capital adequacy ratio. They have more capital. Capital adequacy ratio around 14 to 20% they are having it. So what is their need to fund extra to the public sector bank? They are performing well. So that's what government have decided. So what government is telling is that, okay, right, same as the current financial year, next financial year also, we are not ready to capitalize public sector banks. So that's what they have given in this article. Then 41st news, budget 2023, same as the budget, because in the February 1, 2023, our Finance Minister Nirmala Sitharaman ma'am is going to announce the financial year 2023-24 budget. Next financial year budget, our Finance Minister is going to announce this year, February 1, 2023. Prior to that, budget 2023, insurers hope for tax concession to underwrite industry growth. So prior to that, what insurance industry is expecting is that in the budget, insurance companies are expecting that our policy holders will get a tax concessions. That's what they are expecting. They are expecting. Government, what they have planned, they will be announcing in their budget. But what insurance companies are expecting is that government will give some tax concession for our policy holders. That's what they are expecting. So as well as government will reduce the GST or will scrap, because at present 18% GST is levied for the insurance premium, that will be reduced to 0%. That's what they are expecting. Then pension proceeds also, their government that insurance companies are planning that government will be, for the pension proceeds also, they will be giving tax free. Then for the premium, those who are paying the insurance premium, for them also tax deduction will be there. This is what expected by the insurance companies. At the same time, they are expecting that in the budget session, Insurance Laws Amendment Bill 2022 will also get passed. That's what they are expecting it. What they are expecting is that insurance companies are going to get more benefit. That's what they are expecting it. But in this news article, important facts are there. Fact is that under Income Tax Act 1961, there is a section 80D. According to that section, if we are paying health insurance premium, we can avail tax deduction in our taxable income. We can avail tax deduction in our taxable income if you are paying insurance premium. Let us see, for example, up to 2.5 lakhs, if you are earning up to 2.5 lakhs per year, you won't be paying any tax to the government. So above 2.5 lakhs, if you are earning, you have to pay income tax to the government, right? Suppose in a year you are earning around 5 lakh rupees. So for the first 2.5 lakh rupees, you don't have to pay any tax to the government. But for the rest 2.5 lakh rupees, you have to pay taxes to the government. 2.5 lakhs, you have to pay taxes. This is the taxable income. You have to pay tax for this income, right? But in this 2.5 lakhs, you can deduct the taxable income. That is, if you are paying 50,000 rupees as insurance premium, that you can deduct in this 2.5 lakh. That is 50,000 rupees, you can reduce it. Then for remaining 2 lakh rupees only, you are going to pay the tax. So this is what given under section D of the Income Tax Act 1961, right? So in that section D, it lowers a person's tax liability by reducing their taxable income. Taxable income will get reduced. So actually for 2.5 lakhs, you have to pay the tax. But if you are paying yearly 50,000 insurance premium, this 50,000 rupees can be reduced in the taxable income. Actually for 2 lakh rupees only, you are going to pay the taxes. So it is given under section D of the Income Tax Act 1961. That is what they have given. So in that, you see, if you are paying insurance premium of rupees 25,000 per year, so to the max you can pay insurance premium of rupees 25,000 for you, for yourself as well as for your spouse, for your wife or husband or your dependent children. For them, you can claim insurance amount up to rupees 25,000 rupees. So for per year, you are paying 25,000 rupees for yourself as well as for your spouse as well as for your children. You can claim that 25,000 rupees in your taxable income. You can reduce that 25,000 rupees from the taxable income. Then for the remaining amount only you are going to pay the tax. Suppose the same person, if he is paying insurance premium for his parents also, that is, if his parent is less than 60 years age, for them also, if he is paying insurance premium, that is up to 25,000 rupees he can pay. That 25,000 also he can claim in the taxable income deduction. He can claim it. So totally per year 50,000 rupees he can claim the claim deduction in the taxable income. If he is paying insurance premium for himself as well as for his parent who is less than 60 years of age, so totally 50,000 rupees insurance premium if he is paying, is that amount can be deductible, amount can be deducted from the taxable income. So for the remaining 2 lakhs only he is going to pay. Example we have taken, right? Per year, if you are earning around 5 lakh rupees, 2.5 lakh it is tax free. Rest 2.5 lakh rupees you have to pay the tax. But in that 2.5 lakhs, if you are paying 25,000 premium for yourself as well as for your parents, then you can claim 50,000 rupees tax reduction in your taxable income. For the remaining 2 lakh rupees only you are going to pay the tax. Suppose if your parents is above 60 years of age, if your parent is above 60 years of age, you can claim insurance premium around, that is not claim, you can deduct the taxable income around rupees 50,000. That is, per year you can allocate 50,000 rupees insurance premium for your parents if their age is above 60. So totally for yourself, for your children or your spouse, you are paying 25,000 rupees as insurance premium. Then for your parent you are paying 50,000 rupees as insurance premium per year. So totally 75,000 rupees you are paying it. That's 75,000 rupees can be deducted from the taxable income. So that's also given in the section D of the Income Tax Act 1961. Suppose if both the taxpayer and the parent, both yourself and your parent is above 60 years of age, then for yourself you can reduce 50,000 rupees and for the parents also you can reduce 50,000 rupees. So totally 1 lakh rupees can be deducted from the taxable income. So this is what given in the section 80D of the Income Tax Act. That's also they have given in this news article. One more fact is that under section C in the same Income Tax Act, under section 80C, there is a tax benefits if you are investing in some securities, or if you are if you are doing any investments, right? That also could be claimed under, that also could be deducted from the taxable income. Suppose if you are paying life insurance premium of 1.5 lakhs up to the maximum you can pay 1.5 lakhs per year as a LIC insurance. So life insurance premium you can pay it, right? So that 1.5 lakhs you have invested in LIC. So that 1.5 lakhs can be deducted from the taxable income. Actually you have to pay 2.5 lakhs for 2.5 lakhs you have to pay the tax. But you are paying 1.5 lakhs for the insurance. Life insurance you are paying 1.5 lakhs per year. So that 1.5 lakhs you can deduct from the taxable income. So totally for the remaining 1 lakh only you are going to pay the tax. Not for the entire 2.5 lakhs you are not going to pay the tax. For remaining 1 lakh rupees only you are going to pay the tax. That is also given in this section 80C. It's cluttered with various investment options for tax benefits. For the tax benefits, many investment options is there. In that investment option, one option is the life insurance. If you are investing in the life insurance, currently up to 1.5 lakh per year you can invest in the life insurance. But what insurance companies are expecting is that in the next year budget, this limit will be increased to 2.5 lakh. That they are expecting it. But current it is around 1.5 lakh. So per year 1.5 lakh you can allocate for the life insurance premium. Above that you can't allocate. But now what insurance companies are expecting is that this will be increased to 2.5 lakh. That was expected by the insurance industry, insurance companies. Next, currently for the insurance premium, 18% GST is levied. What insurance companies are expecting is that this will be reduced to 0% GST will be levied. In that, in the budget for the upcoming financial year, this 18% GST will be reduced to 0% GST for the insurance premium. That's what also expected by the insurance companies. Then, in the same act, Income Tax Act 1961, under section 194D, for the insurance agents, there is an TDS exemption limit. That is, if an insurance agent is earning commission up to rupees 15,000, there won't be any TDS deduction. Tax deductible at source will not be deducted. That won't be reduced. If he is earning commission up to rupees 15,000, there won't be any TDS. Right? TDS exception limit is there. If he is earning above 15,000 rupees, TDS will be deducted. But this limit will also this limit is also expected by the insurance companies to be increased. That's also is expected by the insurance companies. So this information they have given in this article. Actually, current what is the rate, you know it, right? Current section 80D, you have to know it. Current section 80C, 80C also you have to know it. Then section 194D. Then currently for the insurance premium, 18% GST is relieved. But in the budget, what insurance companies are expecting is that this will be reduced. GST will be reduced. Then this limit, section 80C, then 80D, that limit will also be increased. That's what expected by the insurance companies. But we have to see in the budget what finance minister is announcing. We have to wait and see, right? So that's what they have given in this news article. Then last news of this day as well as last news of this week, 42nd news. Credit rating agencies ask RBI to come out with the default recognition criteria. Yes, credit rating agency is asking RBI that better you come out with a default recognition criteria. You can ask your bank to come out with a default recognition criteria. What does that mean? What is meant by default? If a person is getting a loan from the bank and if he is not paying any EMI, he is not paying interest, he is not paying principal, then he is defaulting the loan amount what he has taken from the bank, right? So what credit rating agency is insisting RBI is that better you can include default recognition criteria, because if a borrower is getting a loan for a single product, loan for one product, and another borrower is getting a loan for another product from the same bank, and both borrowers, if they are not paying any interest or principal amount, then automatically the loan gets defaulted. Then who is going to suffer? The bank is going to suffer. So that's what the credit rating agent is telling to RBI. So how Mr. delayed payment in one kind of debt, if a borrower is not paying one debt, that will definitely impact the other debt linked to that bank which is taken by other borrowers or the same borrower. So how Mr. delayed payment in one debt impacts the rating of other debt. So normally if a person is taking a home loan and if he is defaulted, another person if he is taking a gold loan from the same bank and he is also defaulting, automatically this home loan person he had defaulted, right? That will impact the gold loan person default amount also. So automatically bank will get affected. So how a Mr. delayed payment in one kind of debt impacts the rating of other kind of debt. Automatically other debt rating will also get impacted. So that it is better to come up with a default recognition criteria. That's what insisted by the credit rating agency to RBI, right? So one more important fact in this news article is that bank loans, we all know that bank loans are regulated by RBI. Same as that in stock market also, a borrower, stock market also, a company can borrow from the market, right? From the people they can borrow it. So that is through the bonds they can borrow it. That is corporate debt securities. That corporate debt securities which is listed in the stock exchanges are regulated by SEBI. Bank loans are regulated by RBI. That information also you know it. So that's all. We have completed. So January 3rd week banking awareness finally we have finished, right? So straight away go to the quiz link in the description box, attend the quiz and check your score. Definitely that will help you to boost your score in the bank exam, right? Okay students, if you are liking the initiative, kindly click the like button. If you haven't subscribed to the channel, subscribe to the channel. If you are liking this initiative, if you like this video, you can share this video with your fellow aspirants and friends. Thank you students.